We actually see a single-digit gold-silver ratio returning as a higher than priced for probability overall. And that means, to answering the question again, is it too late for silver? Well, if it's going to
Surfer, become your best friend. Balances in your bank and stack. What's up, everybody? This is Jared, the Stacking Surfer, and I'm back with another awesome interview. And today I've got Francis Hunt, also known as the Market Sniper. And you guys are going to love this interview. One of the things that I love about Francis is he brings a lot of great macro information. So that's looking at what's going on in the market, what's happening, what are the trends, and he looks out into the future of what's going to be going on based on what's happening today. Additionally, he's got great analysis around technical analysis, looking at what the charts are showing us to give you guys, backup to that as well. He's made some amazing calls. One of the big calls he made was that oil was going to go down to zero a few years ago. If you guys remember, that actually went into the negative. And so they were paying people to take oil, which was kind of crazy. And he's also been calling for a very bullish stance on both gold and silver. Additionally, he's got a great program that can take people through helping them with their portfolios and better understanding how to position your guys's portfolios in a great way. So I want to bring him back up onto the screen here real quick. So Francis, welcome to the show. I'm glad to have you here. We had a good chat just a little bit ahead here. And, the funny thing is I probably should be recording more of these pre-conversations we have, because a lot of times there's great quotes that come out of it. But what I'd love to do is have you talk to us a little bit about what's going on in the macro today. It's pretty much every day there's something new that's going on. We're past the days of gold and silver just kind of hanging out and nothing happening. We continue to see silver outperforming anybody's expectations. I was calling for a $40 silver last year, and I was way off base on that. But I started watching you about a year ago, and I noticed that you were much more bullish on it. So anyway, I'd love to have you walk us through a little bit on some of the situations you're seeing happening today that can affect the price of these metals that that many of us are holding and some of us are thinking about getting into.
Firstly, thank you for having us on, Jared, and good luck with the channel. I'm sure it's going to do amazingly this year. My primary value for people that might be encountering me for the first time is, as I was mentioning to yourself, macro technical takes, and not afraid to be hopelessly wrong and make very outrageous, aggressive calls. I don't work for a bank. There's no one who can fire me. And technical analysis has second-tier status to fundamental analysis in most banking institutions, while in actual fact, I think it is the earliest aggregator for some of the best trades. You mentioned silver, so I'll roll straight into that. We've been aggressive, super aggressive. I call myself the biggest bull on silver and platinum, or almost more so, the white metals, because of the fact that we're in a fiat and debt debasement environment. And that is such a huge fiat and debt debasement environment that it is by scale dwarfing that which occurred in the 70s post the Nixon 71 moment on the removal of gold as a backing asset for the dollar. And we have the entire Western complex, some of which I refer to as slave nations to the US, that almost will be buried with the pharaoh. So I refer to the Japanese, for example, as they never got their freedom post the war. The Federal Reserve and the financial system has fallen under their control. Their policies typically are destructive and supportive to providing low-cost funding to America in the carry trade, which is becoming less so as their interest rates escalate. They've had 100% increase in the cost of rice, so their CPI has actually now ticked higher than America's for the first time in decades, a major shoe to drop that many are encountering in. That will have various repercussions. So we look at the macro, we make outrageous calls on the technical charts, and then we wonder what reasons. I mean, in the oil trade, for example, we were short Carnival, which was a cruise liner. One of its biggest inputs was oil, but we were also short oil and pipeline companies, all on similar setups. As it turned out, the reason the liners went down, putting a bunch of old people in a tin can when there's a flu virus going around and they're most susceptible, turned out to be pretty fatal and bad for business. And of course, lockdowns put an end to their business. So they carried the costs without having the income. So all those things made sense. But at the time, we didn't understand it. But we take the trade and we are comfortable with the narrative following later. However, in the silver trade, the narrative to me is pretty clear. We have a fiat and debt debasement, which is being reflected by gold. Gold is suitably well supplied generally, however, much of it because of its value is bullion stored and can come onto market. You actually have a real squeeze in production ability for the industrial segment of silver, which is a turbocharge on top of an already turbocharged vehicle, which is gold. So we're sitting in the twin turbo. Think of a nice Porsche 911 50th year anniversary, if you like. But those things pull off pretty briskly, as you're aware. So people are under-recognizing that you're in a far more sustainable, far longer macro, very powerful move to the upside in silver, in our overall opinion. So let me just give that back, and you can choose to have me say a bit more if you want to.
Definitely. So what I think's really, so one of the reasons I wanted to bring you on too is, you know, watching what you share both on other channels that are interviewing as well as on your own channel. You know, I can see the passion that you have for it. I can see that it goes beyond just, you know, a rumor that's going on in the market, right? Some macro rumor that's possibly there. You're looking at the technical analysis like you just described, and you start to try to figure out, okay, how do these all fit together? What's really happening here? And then what's the move we can potentially take? And so I started looking at that right around when silver was breaking out above 35. And that's when I started jumping in to buy more and more silver. And one of those reasons is from watching the content that you had too, by the way. And so I want to share that with the viewers here on the channel too. So a couple things that I've been hearing from people in comments, and we do live streams every Friday. And so people will ask, there's two questions I have for you that I'd love to get your take on. One of them is a lot of people are ready to sell their silver for gold. Okay. So a lot of them are looking at the ratio and they see that it's gone from about 106 down to, let's say, 55 or so. And so they feel like it's time to go now. And I think they're misunderstanding, in my opinion, what 50 means on the ratio and where it's been historically, even the last 100 years versus human recorded history, way lower. So that's the first question. The second one is it too late for people that have a heavier gold position to get into silver? Has that train already left the station, or do they still have time to either do a swap or to start accumulating more silver?
Yeah, good questions generally. So to date, most people alive weren't present or cognizant of the 80s run that occurred. And I'm here to say that what's going to occur is larger than the 80s run. Okay. By scale, because of the macroeconomics that are behind it. The US was 30% debt to GDP in the 70s and 80s. That's why Volcker could chase the interest rate as high as he did, which went deep into double digits. And he eventually broke the back of both inflation, but also devalued the excess debt that was created during the Vietnam War, which, by the way, saw more munitions dropped than all of World War II. Most people don't recognize that because as Westerners, European heritage typically, we weren't part of that. We weren't in the war, we weren't fighting it, and it was the other part of the planet. It's like talking about something, 10,000 miles away. But actually the scale of munitions created massive excess of debt. It was actually a fraud. It wasn't backed by the gold. And that's why people called the fraud. And that's why they, rather than correcting and rebasing the dollar to the natural backing that it should have had, they then said, we don't want to be called on the fraud. We're going to remove the gold window instead. So the thing that was the thermometer in the sauna that was telling you it was actually 100 degrees became the problem. Instead of making the sauna cooler, they threw the thermometer out and said, now there's, we're on a fiat system. So that's actually what happened. So the cycle we have built up now that is in the process of correcting is a far bigger, for which the 80s was just the first leg thereof of having an issue and having a temporary solution. Post the conquering of rates and debt, we went into a financialization of everything era. right the way through. Greenspan ran way too much liquidity at far too low an interest rates. We had asset booms. We had all forms of things. We had the benefits of globalization, which masked true inflation. So in terms of costs at the till, but it didn't mask the inflation in assets. So what you got is a mass affluent vibe. Everyone made money on properties. You did a refi every 2 or 3 years on your house. You released another 100 grand. You bought a Porsche Cabriolet and went on a holiday. And this was financialization. And in the US, you have 7-year, 9-year deals, and you pay off, 60% of the car with a balloon payment. Not to say everybody's doing that, but there's a lot of that. So payments became the way, not the money. And you got the masking of this. So this is the financialization of everything era that has gone way beyond just the Nixon and the Vietnam War. We've had Afghanistan, Iraq, and everything else, plus consumer, plus corporate. There's interesting analogies with Coca-Cola. This is one of you mentioned in our pre-chat, Warren Buffett sitting in so much cash. Interesting analogies of Coca-Cola today compared to where it was 20 years ago. 20 years ago, it had higher revenue growth, it had higher profits and much less debt. And today it has much higher debt levels. It has flatter growth, flatter profits, and is 2.5 times the price. So this is the financialization of assets that is still extreme, and that will eventually correct. So all that I'm saying fundamentally is that this is a far bigger run than people realize. But the interesting part about the silver trade is my conviction actually comes from the technical, because I'm macro technical. And for that, I typically show a 3-month chart, which is probably worth bringing to the screen now. Thank you for enabling it. And the 3-month chart on silver is massive. I'm going to just get a different broker than the one I'm trading on at the moment, and go long-term on you and hide that. This is our 3-month setup. Now, we specialize in one particular setup, which is a constriction in volatility, which is when you squeeze. It's a squeezing. And there was a real squeezing. And you mentioned getting in at 40. We had a squeeze within our squeeze. We typically have stop losses there and takeout breakouts there. But we actually had a squeeze within a squeeze. This is a 3-month chart, but inside that, do you have a chart that we can show on here, Francis? Yes, am I not sharing? Sorry, I apologize. I went share screen, and then it obviously popped up another box, which I didn't answer to. Let's get that out the way. Sorry for that. I thought I was already there. You should be seeing it now. Yep. So that is, just to be clear what we're looking at, the silver price on a quarterly basis that runs you back to the 1950s all the way along up here. And I was discussing squeezes as a volatility constriction that tends to bring the springboard of future massive moves. So we've actually had the technical support for the fact that there was a major breakout coming for silver. Typically, we would buy the breakout there and put the stop loss there. However, as I was mentioning, you often get a gift within a gift, and the markets love you. I teach people the markets love you. You're just not seeing the gifts. We are like blind animals walking on pearls and gold and diamonds when we are in the markets, because the market wants to love you, wants to give you gifts, and you just got to bend over, open your eyes, and pick them up. So that was a squeeze within a squeeze that saw actually you should have got leverage long at 25. You would have had a super tight stop, and you're waiting for a target that we have at $333, which will not be the high, but it'll be a resting point where you'll probably pause for a period of. And we've done that draw. So consolidation would come around that time. Yeah, a period of consolidation. In terms of calling the final top, it's not that. Let me be absolutely clear. So we have the 330 over there. It's generated from HVF method. I'm not going to put you through the process of how we do the draw. It will kill time. But people can come and check out how we do all of that by booking a chat for a call or anything if they want to find out more. But we have a target of 333, but we have overperformance expectation. So we usually just do a partial close of around 50%. So when do I sell silver? Because your question was, should gold guys rotate in, or have silver guys overstayed their welcome, and should they be getting out? Yep. So let's also focus on answering your question, which you asked. And the answer is, the exit for silver for us is going to be determined by the gold-silver ratio. Now, the gold-silver ratio has been, during the financialization of everything, excessively lengthy. I'm getting the wrong one here. Let me just get one that has more history. Not so sure. Let's go monthly. There we go. And let's go Oandas. So here we can see that this is correcting, but this is insufficient history. This is running us back to 2007. In fact, this is all capturing the cycle of the financialization of everything.
Yep.
That had its first run, Vietnam War, pre-Vietnam, Gulf of Tonkin, 64 to the 71, and the finishing of the Vietnam War probably officially at 74, although there'd been many withdrawals already by then. So you have that sort of decade of there. None of that is in the view. This has been the financialization of everything, where silver was suppressed relative to gold. So you have insufficient data. I'm saying to you that in actual fact, fundamentally, and on many other measures, Egyptology, it was 8-1. Other measures have been 15-1, 10-1, 12-1, variously around them. There's been one or two more recently during the financialization era that had 30-1. But that was still part of the suppression of silver era, when there was large amounts of silver above ground that could still be leaned on to be utilized. If you have excess inventory, you can always allow valuations to stretch on one of them being devalued because of that inventory. Once you've run it down, which is pretty much where we're at, and everybody says if you don't hold it in a vault inside your own country's borders, you don't have it, and there's now a run, you end up with a problem. And the supply side has been suppressed during this period. Actually, 60 to 70% of silver supply is as a byproduct. So that actually means you don't have very many dedicated silver miners. You have 30 to 40% of your total supply is coming from someone whose specific business is to extract silver. And that's a real problem, because people don't do the byproduct. They're less interested in the byproduct. They're going down for the zinc, the gold, the copper, the iron ore, or something else. And that's okay. While we've already spent the energy, this is kind of useful. We'll take that out. They're not digging there because of silver. It's very hard to forecast.
Yeah, they're not going to ramp up more to get to that byproduct. It's just not going to happen.
Yes, and they can't forecast for it. It's a random byproduct. It's just there. If we see it, we see it. If we don't, we don't. So it's not a silver enriched area. And what's the problem is, there are mines which have silver ores of reasonable quality, or certainly places where silver is known to be, but it's not been financially viable to do, because the energy involved in digging a hole in the ground to extract silver is too much for the price that's on offer. And the only thing that fixes this is price.
Yep.
And now, as we get pushed towards the iPad car, the iPad everything, the battery world of everything, everything is a rechargeable battery, because it can come with surveillance grid software based in it. They want to remove your gas stoves and everything. You know, we're being pushed into this world. Well, the darkness of that surveillance grid decision to have us all in Tesla type cars, as the iPad cars, as I call them, is the gift for the silver market, because solid state batteries will now do 900 kilometers. That's a great range. I tend to like 1,000 Ks as a range, and you're not filling up very often. I have a big old Range Rover that chews diesel, a big turbo V8. I'm hated by the eco guys, but I can go all the way into Namibia from South Africa on one tank. And you know, now you're getting battery cars that can do that and do an 80% charge in 8 minutes. That's probably how long you spend at a petrol place when you grab a P and you fill up your tank. So, but that would require 20% of, if we just went to a 20% share of those supremely superior batteries, would require 100% of current production of silver. That means no silver for solar panels, no silver for anything else, no silver for devices. Don't forget, they run hot in these, they run hot in missiles. Everything is now consuming more silver. And we've spoiled the game of mining. We did it on the green agenda, first of all, by making permitting a headache. It takes 15 years to get a mine to start digging the first, to break ground. And we've spoiled it on account of it was non-financially viable, whilst other mining was tolerated. and oil extraction was tolerated, etc., etc. So what we're seeing, in our opinion, is a greatly diminished cost of oil, because it takes a lot of energy to dig a hole, and a massive move in monetary metals. And we called this 2 years ago with the gold long, oil short trade, which keeps you commodity neutral. And you've since seen, at the time we called that, oil was 87, it's now 57. So the costs for miners are actually going down. Wages are not increasing much, even though we're in a debasement society that's impoverishing people. The energy costs have gone down in debased later dollars, because when it was 129 for oil, we're now later in, we've got more debt, more dollars, more debasement, more issuance, more QE, which is happening through the repo markets at the moment for banks that are under quite clear distress. Another separate point, and I know you have some interesting history with that. So you've got all of that at the same time as you've got a parabola in the silver market. So this makes a massive case for miners. We argue that the only thing you should have as a basis of account is no longer fiat. All fiats are in debasement, although the dollar, as the dirtiest shirt and the largest, dirtiest shirt in the laundry, needs to debase most. So it's down 10% against the euro. By the way, it's down 42% against the ruble, 18% against the Hungarian forint even. So you can see how much it's gone down. But the others are bad too, but we're measuring one leper to another. Chiffin's dilemma sees the export of dollars and debt instruments and the consumption of products. So they are the most indebted, not Japan. Add your unfunded liabilities in. It's a big trope. Japan goes from 253 to 353%. Add your unfunded on the US, you go to 550, 600%. Chiffin's dilemma means the major hegemony exports paper, debt instruments, and dollars. The unfunded liabilities will be reneged on, I expect, in certain ways, as part and parcel of the reduction in living standard in America. So truly, American friends, as a follower of the Silver Surfer, I'm not saying this to upset you or to doom you out. You need to build wealth during this time, because the cost of living is going to go up. Yes. The services government's going to provide is going to go down. And what they're asking from you in payments is going to go up in spite of reduced services. So this is going to be a hard eat if you choose to see this out in the States. Let me hand back to you.
Yes, I agree. So let's leave it on the screen for a second. I said a couple other questions for you on here too. But to your point, Francis, if you're not in this game, you're going to feel more poor, is the way to kind of put it, right? You're not going to be able to keep up with everything that's going on.
And it's important to say stock markets are rebasing downwards in gold ounces. So while in nominal
real estate as well. So
yes, real estate as well.
You may see your equity in your house go up 5-10%, but is it keeping up with inflation?
No.
And is it anywhere close to what silver's had or gold's had or even platinum's had on its run this past year? And it's not. So you're going to continue to lose wealth if you don't have it in these areas. So that's why this channel exists.
And only people who rebase to a gold ounce will be able to see this. You'll be fooled by nominal normie tricks. Oh, everything's gone up. The stock market's never been higher, your politicians will tell you. And you just have to divide them. So let's take your most bullish index, the NASDAQ, and just prove that so that people accept that. It looks like everything is awesome there. The problem is the benchmark of measure is the dollar. So divide by the gold price, which is reflective of the debasement, and you're actually rolling over. This is a head and shoulders, and you're going to have a collapse coming. There is a head and shoulder in the NASDAQ based in gold ounces right there for you, drawn for you. That's your best. I also do the Dow, by the way, and I highlight this answers the gold-silver ratio also, because the Dow I divide by gold ounces, and it also shows how far stocks could correct to the downside relative to precious metals. And this is the history of the Federal Reserve almost. And I'll take that off and I'll show you the full, I'll go 6 months so that you can see the full history here. But this is one of the most important charts people should be shown. And it's overly, it's overly annotated by yours truly, because I like to spell things out. But it's one I refer to regularly. The notion that the Federal Reserve bought stability in 1913, They were established in 13. You had the Titanic in 14. Of course, JP Morgan wasn't on it. Those that resisted, no, sorry, just before establishment in 13, you had the Titanic. You had those that resisted the Federal Reserve establishment. They drowned on the luxury classes of the Titanic. Then you got the Federal Reserve in 13. You had the First World War in 14. You then rolled into the Russian Revolution in 16 through 17, 18, where massive slaughter and the establishment of Lenin, Trotsky, and later Stalin. And then you ended up very quickly in the Second World War in 33. They brought massive volatility, and each wave has been a bigger pump and dump. And I highlight this. This is a broadening structure over here, and I'll draw with straight lines. This is the extremity. What are we looking at? Just to be clear, Dow Jones divided by gold ounces. So you got the roaring 20s, then you got the depression, the slam. Then you get the recovery period. It took until late in the 60s before you made the previous highs of the roaring 20s. All the way up, you went marginally higher. It took 28 gold ounces to buy a basket of the Dow at the very peak, which was 66. Then you got stagflation. The stagflation was such a hard hit, you actually had a half-time bounce over here. I'll return to that before going to the absolute lows just before Warren Buffett started the maximal phase of his investment career, the early 80s, which was when stocks were the cheapest. Buffett's billionairedom is that he was majorly involved, ready, and rearing to go on cash generative companies when the gold Dow Jones valuation was at its absolute lowest. You bought with 1 ounce, less than 1 ounce, 0.99, you bought a basket of Dow Jones stocks. He then presided over the financialization of everything, including Greenspan era, which was absolutely criminal, and has run it up to 44.93. That was .com boom. 45 ounces were required to get one basket of Dow stocks in relative valuations. Now you had the collapse down that was brought into the 2011 type depressional vibes that followed 09 and 08. So 09, you were here and you kept going lower. And of course, gold was going up because quantitative easing made its debut. And some people started to think, hang on a minute, that ain't right in terms of sound money. We had a rally into 2017. They printed so much money, they started to get the stocks to go up again in gold terms. But now we've had a very strong resistance. This is a bigger half-time tip-tap-toe, a zig and a zag than previously. You had a half-time on the big move here. You're having a bigger one here. This will almost count like two legs, the down legs. I've done them in orange, one down leg and then the other. And I predict that you will have a decent chance on balance of probabilities of the Dow going below 1 gold ounce again. I think it goes further in part of this broadening structure. And that is the Fed summarized. That's the stability the Fed brought. They create a pump and dump scheme, which is enriching for them, that most people don't get to participate in. Because so at the bottom of the lows, you're crushed. You don't have the money.
Looking at that, Francis, what I'm seeing is you're still way early in gold and silver here.
You're way early. This should give you the confidence. You're way early for gold against the Dow. Never mind about gold at silver. The other points I was making is currently mined, you're at about 6.9 ounces. It's dropping and it's dropping and it's dropping to gold. And you are in an excess deficit in silver, and typically markets overshoot. So when I say you're likely to go below single-digit gold-silver ratio, you don't start a mine in a hurry. It takes 15 years, and it takes a lot of people with a lot of capital and a lot of banking and a far more miner-friendly environment, which we're going to have to roll back a lot of our mentality on if we want these battery-driven cars with solid-state batteries. So you're going to have to see a lot more digging going on and a lot more approvals going a lot quicker. And even still, the supply isn't going to change that quick. You aren't going to binary. It's not a light switch. You turn it on. You're looking at least a decade, probably 2, before you have meaningful upticks in general supply. And in the meantime, you have deficits and everybody rushing to put silver in their borders, particularly manufacturing workshops of the world like China and India. that have all gone, sorry, we don't own it if we don't have it in our jurisdiction. They're suddenly asking for contracts for delivery to a far higher degree. Now, it's no longer a cash price. They're asking 60% of contracts are being asked for delivery. And that's caused panic because most of what was thought to be there has been hypothecated, various other tricks, other frauds. Remember, America threw out the thermometer because they didn't like the 100-degree reading in Vietnam. They didn't correct for over expenditure, which was the original sin. They threw out the thing that showed the lie. That's why we're still in one major financialization of everything cycle from the 60s, the 50s, right the way through to here. And this is the grand reset, and it's going to see the power move from west to east, as is the precious metals. And this notion of having no manufacturing and going all service economies. Ask London and the UK how that's worked out for them. And America has more manufacturing than Britain, but they've given up far too much. So this trades down. Please bear in mind, this is a log scale chart. So if I just take the log scaling off, you are further down. But that's a massive move to go from 11 ounces down to sub 1 on the Dow. How much of that is going to be Dow nominal devaluation and how much is gold upside? I think most of it's going to be made on gold upside, but there will probably be some stock market corrections in that. So this is a very
quick question for you too on here. Do you foresee a period of time? We're not on the right chart here, but do you see that the gold to silver ratio could go up again one more time before it gets back down towards the single digits and continues to head that way?
My overall impression is that we're in the contagion part of the correction in the gold silver ratio.
Okay.
So this is rolling over. Most rallies are followed by downside continuation. You can see it there. And we said 65 was the key level, and it should be run. That is a triggering of a kind of a macro head and shoulders that we have on a much bigger time frame, technically, that we've drawn many times on our own channel and we remind people of. It's not the most beautiful typical structure, but it is a structure. And you can see 65 was key. You went as high as 126, and then you are in a real triggering event. You've triggered at a downside event here, which has a very, very deep repercussions that should see you run to 32 just on that technical pattern, and then further overperformance and reversal on that. So we actually see a single-digit gold-silver ratio returning as a higher than priced for probability overall. And that means, to answering the question again, is it too late for silver? Well, if it's going to $1,200, does $82 sound too expensive for something that's going to $1,200?
You're gonna wish you bought more.
And the other thing you wanted me to address is the law of the parabola that we referred to very specifically. And this is the exponential chart that actually the largest part of your money is actually made in the last 5 to 10%. You'll make 50% of your profits in that final 5. People will sell too soon. So let's be clear, if you're going to run 333, but you then overshoot to a $1,500 or a $2,000, remember, markets overreact in the opposite direction. Everyone suddenly becomes silver is the god money and overreacts. There is a point where I will sell this. There is a price point. I don't know what the dollar represents at that time. I don't know what currency will be in force at that time. If it's still a dollar, a digital dollar, something else. But when measured to old dollar terms, it will be in 4 digits. I have quite high expectations for that event. And here's the other thing I want to just introduce that's slightly unscheduled that we didn't discuss, but there is real opportunities to maximize this particular game. I did an emergency check-in with my community on this. There are some advocates that say on the precious metals market now, when you look at the straight line up, let me just hide any lines I've drawn, they'll say there's no cheap entries in here when you're on a parabola now. And in one level, they're absolutely correct. On the monthly or the 6 monthly time frame that I have you on, where do you enter? If you bought now, where do you put a stop down here? Well, you can't do that. You needed to have bought a lot sooner. My key point is The gift of multiple timeframes means you continue to get entry opportunities in smaller timeframes. And I've left a broker platform that I actually use with trades. You had a pullback here, and that was Bitcoin rotation trade. Do you remember that one? Everyone's saying gold's top, silver's top, Bitcoin rotation trade. What did we get? We got on this daily time frame an opportunity to re-enter. There are two entries I put on. I would have had stops down here. I would have been entering them here on what we call the relative low 2 and utilizing HVF method in what is a macro bull on lower time frames with stop losses. Those stop losses are now up here, by the way, with guaranteed profit locks, in case you're wondering where they are. We entered further entries, and those are now sitting deep in the money. You've got about 150 there, you've got about 305 there, and we are going higher. And this recent pullback, 2 margin increases within a week. What did we do?
That spells desperation, by the way, in my book. They are freaking out.
Yes, yeah, absolutely. They are freaking out. We said this is a bull market. We have real HVF method. We covered this inside our community, falling wedge, real opportunity to break in. We bought that wick. We bought that wick. We have stops here, and these new entries also golden for us already. We're trading up at 80. By the way, I had 5 in total new entries, all at 5 contracts. This one I've halved because it was the less good one. The other 3 I closed at the 78, 79 in case it slowed down once it started getting to the highs. That is what is achievable to maximize. Everybody knows you can buy silver. You can probably go to Costco if they have stock and throw it under your bed. You don't need to pay me any money to learn how to do that. That's the rudimentary elements. I think you should do that. That's called investment silver. Here it is. Here's some ounces. I've got a 100 ounce here that I flash every now and then as well. The rest are somewhere safe. You can do your shoulder presses with that. But can you maximize in what looks like a parabola on the way up whilst in that situation, so that you're sitting with a lock-in, a profit lock-in that was once a stop loss? That's showing 105. That one's got 88. And we're expecting the market to go higher, and those will be held till $333 or $1,200. What do you think those numbers are going to be when they get up to those levels? Well, you know, you can work it out if you care enough. We are doing this at each opportunity it's representing, and it is giving continuation patterns for us all the way. Those led to profit gains everywhere along. So you can maximize this to build generational wealth in what is going to be a single-mindedly strong market generally, but will occasionally on lower time frames. And I'm not talking 5-minute charts. This is a 4-hour. It's probably my natural time frame between 4 hour and a day. It's harder to hold positions on weekly charts. You have millions of days to do nothing. You enter and you sleep. That's almost long-term passive investing. That's my natural time frame, the 4 hour and the daily. We had real opportunities. We rode them up, and they've kicked massive 6-digit sums at us. I kept my 2 best entries, and I closed the other 3, and I halved my second best one. And I actually had 1 entry there for 10. So we've made an absolute whale just out of this move off a falling wedge. And we banked that, and some of that can be withdrawn and turned into more physical. And this is the time. So your investment will make you money, but it is an opportunity to accelerate. Our core theme, build wealth during reset times. It's going to give you a disproportionate opportunity to build wealth if you understand the game. The game is the monetary metals. It's barely begun. The best profits are still to come, and they're going to come to the latter period. Then what you do is you preserve that with multi-jurisdictional holdings, different venues, vaultings, investments, holdings, some at home, some under your pool, some under your bed, whatever you do, different geolocations, non-Western. And that is the third point that many people are uncomfortable with. Time to travel, time to holiday, time to have a few places, even if you just rent, that you live outside of the jurisdiction that you start to familiarize yourself as home. That is reset preparation. There's no way we get all of these gifts here without later counterparty risk, bank failure, potential loss of balances in bank accounts, all sorts of things. Counterparty risk on brokers, regular withdrawals are recommended. The better and the further this trade goes. the greater the bankruptcy is near to happening. So there's quite a lot. There's absolute dark and there's unbelievable opportunity in that. And I'm saying position with the opportunity, prepare for the blowback of the darkness. It's yin and yang, and it's not all dark and it's not all light. You have to play both games. There's an obstacle course to be run. You either sigh and fall in a heap and weep and say, I can't do it, and get dragged along the dirt and bullied and UBI serfdom and your wealth crushed. Or you go and you seize this thing and say, I'm going to come out wealthy with a multi-jurisdictional existence. Let me hand back to you.
I love it, Francis. And so this is why I wanted to have you come on, is to hit all of these things today, and in the way you rounded it up too. Some of the people watching this are going to be in a position where they want to keep it fairly simple, and they're going to just go with the physical metals, which is great. But we also have a lot of people that want to go more into a more sophisticated trade. They may have more complexity. They may have a larger, amount of wealth that they're looking to protect, and they're also looking to grow. And so what I love about your approach is you've got kind of, multiple options for people that can come in. And, I know there are people that watch this channel that have a lot of money that are looking to try to figure out, they're looking at the multiple jurisdictions. They're trying to figure out, what does that look like? How do I do that? Where are the safe places to go? What's the real risk to it? How much do I put in each of those places? How do I mitigate all that? And, for the average stacker that is just going to go into physical, that's not going to make a whole lot of sense to you. But for a lot of people that are looking to broaden themselves a little bit more and diversify the risk within this trade, let's call it, of precious metals, there's these options that Francis has that I think could be really cool. So it's one thing I'm starting to explore, and I definitely want to get back in touch with you, Francis, for myself and for my family, to kind of explore a little bit more of what that would look like. And then we can start to make those decisions. But I want to thank you for coming on. This was awesome and great. I wish I had more time. I'm still in a day job doing this on the side. And so sometimes it takes a little bit. I get in between calls and things like that where we can do all these things. So I'd definitely love to have you on again. How can people find more information out about the Market Sniper, about the work you do, Francis, and be able to arrange a call with you guys to go through their personal situation so that they can get some ideas of what the next step is for them?
Absolutely. It's not just what I can do, it's what can I do for you. That's Perfect. What's important. And we have clients in our community that have 10x their accounts in the last 3 months, all with managed stop losses, trading aggressively but smartly with managed losses, utilizing HVF method. Follow us on the YouTube channel, The Market Sniper. I'm also on X under The Market Sniper. In some time, the cryptos will become part of the story. They're not the main story now for me, but there are some growing turnings, and there's certain tokens that have shown themselves that will outperform gold. Most thing for outperforming gold is silver, platinum, and miners. That's the list. But how do you maximize that? How you utilize some of the things I just gave you a little taste of on the slower time frames for building a far larger position and growing your wealth far more exponentially without taking disproportionate excess risk. How you can do that. You can learn this skill inside our program. And for that, you book a call in our YouTube links where it says book a call. There's also a free mini series where we drop a video every day for 6 days, and then we just give you a quick run through, a flyby detail. No marketing, no spam. We never sell on our lists. And you'll get the videos, and you can have a look and get a bit more info, and then you can choose to book a call. If you wish to, you can join our community. Then we are focused on reset finance. We're not the IFA. We're unregulated. We're not a normal IFA. We are positioned for how do you, for the given set of circumstances we currently are facing, which is a failure of one massive, almost hemisphere hegemony into another. How do you best manage your wealth that preserves, grows, and continues you and takes you into a profile where you can have the greatest freedom in totalitarian times? That's our focus. It's a very specific set of terms, and I think it's the niche that serves the times we're in. YouTube, The Market Sniper, and X, The Market Sniper. Thanks for having me on, Jared.
Thank you very much. So we'll have the links down below. And for you guys that are not in the United States, this still applies to all of you as well. So anybody that's watching this that might be in Australia, if you're in Canada, if you're in the UK or in other areas of the world, you can reach out to Francis too. So I'll put the links down below. But I want to thank everybody for coming. And until next time, peace out, guys.